everyone, welcome to PwC Tax Bite podcast series. I'm of course still Peter, and I'm very happy today to have Gilles Franssens and Jens Kiekens with me in my virtual recording studio. Jens and Gilles are part of our transfer pricing practice, and they are very much focused on tax model design, but also very close on all tax policy developments. And that's why I invited Jens and Gilles today here to talk about a public consultation that the OECD has released recently, last week at the moment of the recording. And it's about an update to the OECD transfer pricing guidelines, specifically an update that deals with Chapter VII, which is about services. So I thought this was an extremely interesting development, and I want to have the view of Jens and Gilles on what this means, what the impact can be, and so on. So let's explore that together. Gilles, starting with you, maybe. An update to the OECD transfer pricing guidelines. Is that a common thing for the OECD to do?
Yeah, so if you look over the past decade or so, there have been, depending on how you look at it, 4 or 5 major updates to the transfer pricing guidelines. Most important one being the 2015 update following the BEPS project. And in most of these updates, the role of people and the way people functions and decision making should be remunerated has really been a sort of point of focus. That said, though, the chapter which most directly deals with the remuneration of activities performed by people, so services, that chapter still dates back to 1996. The exception here being the part on low value adding services, which was introduced as part of the BEPS project. So that means that in practice, actually, most of the discussions on how to deal with services are actually driven by the more general transfer pricing principles, which are outlined in chapters 1 to 3 of the OECD guidelines, or some of the more specific chapters on, for example, intellectual property, which also has a fairly large coverage on functionality, for example, the DEMPI concept.
Okay, yeah, thanks, Gilles. So interesting. Services, quite important indeed, hasn't been dealt with for a very long time. But nowadays, services is looked at by many institutions and from many angles. If you look at the United Nations, they are looking very much into the cross-border taxation of services as well. Source taxation is a very important topic. It's also connected to permanent establishment and taxation of employees and mobility of work. So clearly, services is being looked at from many angles. Also now the OECD from a transfer pricing perspective. Now, these discussions typically take quite a long time before they crystallize. In this particular case, Gilles, how fast can we actually expect an impact?
Yeah, so compared to some of the other initiatives that you've mentioned, which would require domestic legislation updates and potentially treaty updates, the transfer pricing guidelines, once it is updated in a final form, in many countries that has a direct effect, so fairly immediate, or it can be introduced through tax administration circulars. Again, something that can have an impact pretty quickly once you have a finalized document. Today, it's still an initial draft for which consultation is ongoing. That said, this could be the only round of consultation for this document, which would mean or could mean that we could already be looking at new guidance pretty quickly, potentially even already in 2027.
Okay, that's quite a fast impact, I would say, potentially. Now, in the audience, there are not only deep transfer pricing experts, Gilles, so maybe can you elaborate a little bit on why services are so important in TP models based on your experience?
Yeah, so if again we look back over the past, say, 10 to 20 years or so, on average, companies have started to significantly increase working across borders, which in the COVID period was accelerated, as most of the people will be familiar with. And that can be through the setup of shared service centers, but also matrix management structures, etc. All of that means an acceleration in the number of service transactions. And the interesting or perhaps complicating part here is that perhaps more so than most other types of transactions, services are very industry and even company specific because it's really a consequence of how the business is managed. So that means that the type of challenges which companies are facing can also be quite wide-ranging. So this can go from how to remunerate a body of senior decision makers to getting a deduction for basic cost plus services.
Okay. Well, thanks, Gilles. So you made it very clear, I think, that this is a very meaningful policy update that could have impact quite soon, actually. So maybe can you explain also a bit what is the actual ambition of the OECD? Why are they looking at this now?
Yeah, so ultimately, the discussion draft, it seeks to update the 1996 guidance on services, which I mentioned. So it's still a discussion draft with the possibility to provide input until the 22nd of July. That means that the final text may still differ, but I think the big items to be covered are already clear. What's key about maybe one point to mention, Peter, in terms of the governance, which is underpinning the whole discussion draft and the process. And that's the fact that this is actually an OECD initiative, so not an inclusive framework initiative, which means that countries like China and India, they may not formally endorse the new guidance as they are non-OECD countries, which could mean an even more fragmented landscape in the future. And the ambition of the discussion draft is actually to align the guidance of intragroup services to the 2015 BEPS work. In reality, though, and we'll get to that throughout the podcast here, but in reality, it's going quite a bit further in a few domains. So just to name a few examples, it introduces a fairly binary view on how to remunerate services. So is it going to be a cost plus versus a profit split, with not leaving a lot of room for something in between? It expands on the benefit test and specific types of considerations like shareholder costs, pass-through costs. And then third, it also introduces a much higher contemporaneous documentation threshold. What it did not touch on, though, is the low value adding services, which was introduced very recently in the 2015 BEPS project.
Okay, thanks, Gilles. That's really interesting and well explained. So, Jens, maybe if I can turn to you now, and let's dig a bit deeper now in the content of what was actually released. So, you looked at the documents pretty closely already, I know. What kind of changes are there on the table that, the audience should look out for?
Yeah, well, if we look at the structure of Chapter 7, this as such did not fundamentally change in the sense that the two key questions for assessing the arm's length nature of an intragroup service transaction still remain the same, being, first of all, has an intragroup service been rendered? This is what we know under the benefit test. And secondly, if a service is rendered, what is an arm's length charge for that service? The document does contain quite some additional guidance and clarifications on the different concepts underlying those two key questions, such as the benefit test, shareholder costs, duplicative activities, pass-through costs, and also importantly, transfer pricing methods for intragroup services, etc. What is new in terms of broader structure of Chapter 7 are, to me, the following three items. First of all, it's the introduction on the concept of the accurate delineation. So before the chapter discusses the two key questions, it now also has a kind of introduction on the concept of accurate delineation of intragroup services, which aligns it with chapters 1, 2, and 3 of the OECD transfer pricing guidelines that were already changed before. And this introduction puts additional emphasis, for example, on the interdependencies between services and other intergroup transactions, but also whether the provision of services involves any usage of IP, something which is relevant in the pricing of the service transaction. A second change in the broader structure relates to documentation. So as Gilles already mentioned, there is quite some emphasis on having the right documentation in place to support the TP policy for intragroup services. And then finally, it's the examples. At the end of the document, there are 21 examples that should help clarify the principles that we find in the body of the document.
Okay, thanks, Jens. So if I summarize, if I understood you well, we have the same two basic questions on the table. Is there a service? What is the arm's length remuneration for that service? But the document also provides quite some additional guidance clarifications. You mentioned the emphasis on documentation as well, and the fact that all of this is clarified through examples. So maybe let's zoom in a bit deeper on the two basic questions that you just referred to. So if you look at the first question, is there a service? What are the additional clarifications that the document brings?
Yeah. So again, this first question is what people will know as the so-called benefit test. And the core question here remains the same, being, would an independent enterprise have been willing to pay for this activity? Or in other words, does it provide an economic or commercial value to the recipient? This could be in the form of an increase in revenues or profits, a reduction in costs or losses, or for example, operational improvements. What is interesting and positive according to me is that the document states that the question around the benefit test should be dealt with separately from the question on what is an arm's length charge, meaning that if tax authorities would consider a charge for intragroup services not at arm's length, this does not automatically imply that the benefit test is not met. What is new here is that the document specifies that there should be what they say a reasonable expectation of such a benefit, but this does not mean if the benefits do not actually crystallize that no service has been rendered. If benefits do not crystallize, then the document does say that companies may need to look at multiple year data and reconsider whether a third party would be willing to continue paying for that service. Other interesting elements in the context of the benefit test for me include the fact that a service recipient that would realize losses does not provide grounds to conclude that no intra-group service has been rendered. But the other way around also, that there may be situations where a service provider charges less than the cost for performing the service, for example, to maintain internal control over an activity. And at the end of the document, various examples are included that illustrate the application of the benefit test. This also includes examples on concepts such as shareholder cost, duplicative services, and incidental benefits, all of which are actually examples of activities that would not meet the benefit test. And some of the examples cover, for example, when M&E parent costs relating to acquisitions or divestitures can be considered as a service or should be considered as a shareholder cost.
Okay, thanks. So clearly explained. So if the benefit test shows us there is a service, then we come to the second question, Jens, and that is, how do you determine an arm's length charge for such a service? What does the document say about that?
Yeah, well, the new guidance on the determination of an arm's length charge clarifies that it should not be assumed that cost-based methods are always preferred, and the provision of intragroup services varies along a spectrum ranging from low value adding services to services which entail a greater level of complexity or integration, for example, resulting in the creation of an intangible. What quite struck me in this context in the document is that the examples included at the end seem to take a quite binary approach, in the sense that it almost seems to be either a cost plus or a profit split, whereby the threshold for moving to a profit split in some of the examples seems to be set fairly low. The issue I have with this is that in reality, we see that the spectrum in services which the inclusive framework is referring to not only comes back in the nature of the services, but also in the types of remunerations we see, whereby there are all sorts of service remunerations in between a cost plus and a profit split. If you think, for example, of sales-based service remunerations or different sorts of value-based fees. Another element that I found very interesting to read in the document relates to the concept of pass-through cost, or so-called disbursements. These are typically defined as costs from third parties to which the service provider does not add value, and which could also have been directly charged to the service recipient. Think, for example, about the cost for a marketing campaign of an advertising agency, which is appointed by an intragroup marketing service provider. And the typical question in such a case is whether that third-party cost should be part of the cost base of the intragroup service provider that is subject to markup. And what we see in tax audit practice is that tax authorities typically take the position that these costs should indeed be marked up, often referring to the benchmark comparables, which are also deemed to have disbursements, as a result of which the markup percentage that you derive from a benchmark study already factors in whether or not disbursements incurred by the service provider in the benchmark study are marked up. But now what we see and read in the document is that the inclusive framework explicitly recognizes that it is often difficult to determine whether costs are marked up at arm's length based on the financial data of benchmark comparables. And they say that companies may consider other information, such as industry practices or company-specific information, to indicate whether certain costs are typically pass-through costs. And this means that if such evidence is available, that it provides grounds to companies not to apply a markup on such costs. The example that is included in the public consultation document is a really straightforward one. So the question that I do still have is whether tax authorities will still expect companies to look at the materiality of potential disbursements at the level of benchmark comparables, and whether they will accept it if considering cost as disbursements leads the service provider to realize a return that goes below the interquartile range of the benchmark study.
Okay, thank you, Jens. So quite a bit of information there on how to determine the arm's length price for the service. Maybe last topic I wanted to zoom in a bit on with you was you mentioned that there is quite some emphasis on having the right documentation in place. Can you maybe explain what this could mean for the multinational enterprises, for the audience, and what's in the document?
Yeah, well, the document says that there is no minimum checklist or documentation standard, but it does clearly create an expectation that companies should have contemporaneous documentation on each of the elements that we just discussed. And this could include, for example, documentation on the expected benefits of a service, also documentary evidence supporting the benefits, and they give some examples like reports, samples, memos. Also, whether the expected benefits have actually crystallized, and if not, why so? And next to that, of course, also documentation on the cost base, whether there are certain pass-through costs, evidence around why they are considered as pass-through costs, etc., etc.
Okay, thanks, Jens. I think this is a bit what we had time for today. I'm sure if people are more interested to know about this development, what's in the document, I would ask them to tune in also for our webinars. PwC is regularly giving webinars, and the next one, 1st of July, will also cover this topic, so everyone is more than welcome there. But maybe before we wrap up, Jens, maybe can I ask you, what would you recommend to the audience that people should start doing to prepare for this new guidance? What's your takeaway here?
Yeah, so I would say two things, Peter. First one is check your existing intra-group service policies and how they compare against this revised guidance, meaning how does this apply to the tax model of my group, to my industry, to the type of services that we have, and thereby focusing on the two key questions being the benefit test, but also the arm's length charge. So the TP method, is it appropriate, or could they, for example, be challenges on the cost plus that I currently apply? So that's one. And then two, I would also say prepare for putting in place the expected level of documentation, because although they don't call it a minimum standard, the public consultation document does materially raise the bar on what companies are expected to have in terms of documentation on a contemporaneous basis.
Okay, thanks. Very concrete points, Jens. Gilles, anything you want to add from your end?
Yeah, perhaps just to emphasize, so the current document, it's still a discussion draft, so it's not final guidance yet, but it could turn into final guidance with quite a meaningful impact, which Jens talked about, for companies quite rapidly, given that it is transfer pricing guidance. Maybe an important element as well to highlight is that the document does not deal with some of the core principled discussions that we're seeing in transfer pricing these days, which are very much centered on the control over risk. So what's the value of decision making versus contracts, etc. The hope is that the global mobility project that the OECD is tackling will deal with that, but that is for the coming months to be seen. And maybe just to conclude, there are some elements in here which can have far-reaching impacts for any individual group that can be positive or negative. And that's because of how different the service models are, depending on an individual organization, their industry, how they are organized, and the tax model that's set up. So the impact can be quite far-reaching.
Thank you, Gilles, and also Jens. This brings us to the end of the podcast. So I would like to thank you for sharing all of this with our audience, but also thank the audience for tuning in. And if you're interested to follow the developments as closely as possible, please stay tuned for our Tax Bite podcast series. Thank you.